Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. What I'm going to do tonight, as always, is walk through the latest technical report at DailyFX.com and identify support and resistance levels that we can base trades on. The presentation is located directly beneath this video. Enjoy the show.
So here are the four pairs that I will be discussing this evening: the Kiwi, Aussie, Euro, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar, and this is the channel that I have been applying for the past, I would say, 6 or 7 reports now. We can see prices have stayed within that channel. As I was mentioning yesterday, we had that slight case of spillover. Prices then fell a little bit, and then we had another round of spillover as well. And then finally, this could be the reversal that I was looking for. Prices now heading towards that lower support line of the channel. As I have been mentioning, I'm looking for a downside breakout to resolve this pattern. So what we might do now is wait for a close beneath that lower support line, where we'd look to enter and then place our stop back inside the channel. The next chart is the Aussie dollar. As I was mentioning yesterday, I had a long position which I initiated around the 71.50 area. I was mentioning how I was going to exit on a close beneath the 71.40 area, which is exactly what I did. So I got stopped out here with a small loss, and I've kind of taking this pair off my radar screen, although I will mention this longer term support line, which is what I would use right now to gauge the pair, and what I will look for my next trading opportunity in this particular pair, which would be that simple daily support line on the chart here. The next chart is the euro dollar, and as I mentioned yesterday, we had that move down to the 133 area. This is a daily chart, by the way, and that 133 area is also the previous high, this candle right here. So what I would do right now, I like the 133 low, at least for a temporary short-term low. So right now with prices near the 35.70 area, I would look for prices to move lower, where we can get a favorable risk-reward entry, and that would mean getting an entry near the 133 figure, so we can place our stop about 50 pips or so beneath 133, maybe 132.50 or something like that. So that's what we can look for moving forward. I realize that that's about 170 pips or so away right now, but again, volatility has been extremely high, so that's something that we could definitely keep on the radar screen, and prices might get down there within the next 24 to 48 hours. The last chart is the dollar yen. As I have been mentioning for the past several reports, the prices have broke out above the resistance line, and I'm still waiting patiently for prices to come down and test that former resistance line on the opposite side, which I am now expecting to act as support. So this is something that I would keep up on the radar screen as well. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.